Thank you for tuning in to another edition of the Vulcan Report. This end of day report is being recorded for December the 5th, Monday, 2016. You're currently looking at a chart of the SQQQ, which is the inverse ETF for the NASDAQ 100. The counterpart would be the TQQQ, and the little brother would be the QQQ, which used to be, at one point, it was changed to QQQQ, or how we used to refer to it back in the day, cubes. All right, so enough of that. What do we have here? We have a price action taking place within the center of the Kumo cloud, and we have the overall position of this market. For the most part, it's been okay. So chances are it's going to change from this bearish makeup back to a bullish one and break back outside of the Kumo cloud. Where do we have the evidence for this? Because the momentum is still pointing upward. All right, so you can't trust the price action inside the cloud. I know this, but because momentum is here and because we have a situation where you opened here, you closed here and opened down here. Gap was filled on an intraday basis, but even still, all we did was retrace some of the move here from this bar. So I think a continuation is in order, and we should see a break back out here as the stock market continues to ebb and flow, getting a little top heavy. All right, gold is still not ready to break out yet. Looking at the gold futures, it's getting close. Trying to make up its mind what it wants to do. 1204 is your immediate upside resistance, followed by 1247.10. That still puts you well below the Kumo cloud of death. So a lot has to go on here. So it does have a couple of upside hurdles. This is a well-defined bear market at this point, but I know what you're going to say. What about the pointer back here? Well, at some point that is going to have to be dealt with. So you can make the argument, but it looks like we're looking for a bottom and basing out here. So we'll have to wait and see, and only time will tell what we do and where we go from here. Looking at the ramp, you got a ramp coming up. All right, next couple bars should be able to push us back up here, and on the weekly chart, we got these ramps to contend with up here. So this is the trajectory. I think it's following it. It's doing exactly what I thought it was going to do. Still relatively inside the Kumo cloud on the weekly. This is 1, 2, 3, 4. So we're going on the 5th week in a row of a down week. This is not uncommon, as we had back here 1, 2, 3, 4, 5, 6 straight weeks of climbs. So we can have another week or two of the downside, and that could put us below here, only to springboard back up again. Time will tell if that's the case or not. Or will there be an uptick only setting up for another leg down? Hard to say right now because the algos aren't really talking too much, except for you got downward pressure momentum that is just locked in. All right, we didn't hit. We haven't really closed on any significant new lows, like new support lows. We're just kind of waffling around down here. You know, we're still where we were 3 weeks ago, price wise, more or less. All right, looking at silver in the weekly, it's following its trajectory beautifully, way better than gold. So silver looks like it could pop first, but it does have this overhead resistance that it needs to contend with, and until that's dealt with, I don't see that happen anytime soon either. But the momentum is still pointing down, and it's a little flattening out here, but we do have this steep ramp coming up that could really catapult prices back up to 19, even 20 from where we are now. So that would be amazing. Everyone is excited about JNUG, and JNUG is trying to get ready to do a little something here. Still below the Kumo cloud, but flattening out nonetheless. Trying to make a run and get back up into the cloud and into the ramp, because this is a steep ramp. This one could really, really take off, you guys. It could really take off. We just have to see what's going to happen here with the GDXJ. Let's see. And GDXJ. Yep, here's the ramp. Coming up on the ramp on the GDXJ. I think the miners are getting ready to do something, especially these juniors. Let's see if the big boys are ready to play. Take a look at the GDX. Yeah, it's following the trajectory of the ramp as well. It's looking really sexy. Momentum is still down but flattening out, so this could be a nice solid base for a bottom happening inside the Kumo cloud. Only time will tell. We'll have to follow the pulse waves very closely on these. Let's take a look at what some of the shares may be doing. Let's see here. Let's look at Pretty Ricky. Alright, Pretty Ricky, same thing. Extended out and starting to elongate. It's within the Kumo cloud of death. Downward pressure on the momentum side, but it's kind of flattening out here. So these are looking ready and possibly ready to take off. Overhead resistance of $8.20 will be the immediate resistance I would see on this one. Alright, looking at, let's see, AG. Alright. Already starting to follow into the ramp. AG is looking like it's getting ready to take off. You know, it's funny because as I'm doing these videos, it gives me a chance to see some things, and this one looks really attractive. I think I might get some tickets working on this one myself for trading tomorrow. AG is looking like it's ready to pop, and if it pops, how the ramp finishes right here, there's enough air built into it and lift off to put it to 2250 easily. Alright, I can't remember always all the tickers people ask me to take a look at. So if I forget, I'll just have to, do it in another video. Not to mention, I ain't gonna front. I'm tired. Alright, let's see here. Let's look at oil. Alright. Crude oil on the weekly. You see it's hitting new highs. We had a new high on the close. Very quiet so far. Nice momentum turning upward here. But I still can't, help but to say that this is looking like the dollar used to look. Every time we hit 52, we crash back down again. Struggling at the 52 level. We're still in that range. From 52 all the way down to here. This is the range, folks. This is the acceptable trading range. It's established for itself. Alright, on the low end, 39 and a quarter. On the high end, 51.67. And 52 and a quarter. So we'll say 52 and a quarter. So that's a wide range. And it's just moving along here, not doing a lot. And it's been like this now for months. Look at this. That's a wide trading range. All you're doing is moving up and down in it. Every time you hit it, crash back down, rally back up, sideways, break out, break down, break out. It's just crazy. This market doesn't know what it wants to do. Alright, let's look at this dollar. Dollar struggling to stay above par. I told you it struggles with par. Here's par. It's trying to make par the new support. It needs to do that if it's going to take off and get to the 120s and 130s and 140s again. If that happens, I have to say, all the guys have been talking about hyperinflation. Yeah, I can see that. Yeah, I can see that go-go 90s type price action coming into play. Yeah. Par needs to be the new support to make that happen. If the US dollar can stay above par, there is a strong possibility of hyperinflation coming to America. And there's nothing they can do about it. If this dollar gets any stronger and we break this 102, it's going to run. It's just going to run. It's going to take the place of the bond market. Because remember, the bonds were hot and the Fed was manipulating it because the Fed was the only one in there trading it. The Fed was buying up bonds like nothing. Well, That's what's happening with this dollar now. This dollar's being propped up, defended, and accumulated, and they're keeping it strong for whatever reason. And remember, a strong dollar is going to hurt you on the import export side of things. It's also going to hurt us here at home. I'm just saying, people don't get it. The markets tell you the story. The price action works. It is what it is. This is a big deal. This is a really big deal because at the end of the day, before they crash something, they gotta bubble it up first. So you ain't seen the bubble yet. If this is exactly what's taking place, if what I'm saying here is correct, this par is going to be the new base, and we're going to the moon in the dollar. To the moon in the dollar. And I mean moon. 120s to 140s. I wouldn't be surprised if we see 200. And don't think it can't happen, folks. They can do anything they want, and the dollar's been that high before. It's been much higher. So if my recollection proves me right here, serves me good, I think the highest we may have even seen was, I know it's between 140 and 170 at one point, many moons ago. I have to do some analysis and take a look at my data and see how far back I can go, see if I'm right about it. But I do think it was somewhere between 140 and 170. Didn't stay there, but I think it hit it. So I'm just saying, you guys, you heard it here first. Watch that dollar, because it could be really nasty coming up. All right, let's finish up with bonds. Okay. All right, on the weekly, bonds are below the Kumo cloud. We've crossed also on the trend lines, and they're starting to dip into the cloud. This is a really dangerous alert. If these trend lines drop below this cloud along with the price action, that's the beginning of a major bear market in bonds. Major bear market. We're talking skyrocketing interest rates. All right. The way this thing is looking now, we're talking powerfully too, because the market's been suppressed for so long. This translates from going from the 143 cracking below the par and getting down into the 90s and below. And it's not like it hasn't been there before, because it has. All right. Let's see if I can show you a little something here. I'm not an expert in how to do these things. Let's see. If not, I'm just gonna have to. Yeah, I'm gonna have to just do it in system output. I'll find another video, but I'm gonna show you where bonds have been too, so you can get an idea of what's coming. These interest rates are in a danger zone of really getting to a point where the Fed won't even be able to control it. I'm just putting it out there, folks. Right now, the bond market is in trouble of sending interest rates to the moon, along with a very strong dollar. Very strong dollar. Very strong dollar. I can't emphasize that enough. And this is a very tricky situation, because then where does that put gold and silver, the precious metals? Would that make it fall out of favor even more? Would that kind of weirdness cause a frenzy in the selling of the gold market? I'm going to venture out to say, and hopefully I'll have more data within the next couple of days, but I'm going to say you're going to see gold and silver go through the roof for other reasons. Remember, the markets are illogical and can remain illogical indefinitely, far longer than you or I can remain solvent. So we have to trade what we see and act accordingly, and not how we feel and not what we think. The price action is suggesting that we're about to see gold and silver go bananas, go ballistic, and take the mining shares with it. If the scenario, if the above scenario takes place, i.e., bonds collapse in price and the dollar rallies to exorbitant levels that we have not seen since the 90s, that would create an environment for the gold and silver price, along with the mining share prices, to explode with returns that will be absolutely insane. So this is a perfect storm of not economic Armageddon, but the reverse. This is the perfect storm for major wealth transfer and wealth shift if you are aware, alert, and prepared to participate. That's all I got. Come on over to postwavetrading.com. Learn how you and your family can participate in the perfect storm of financial outpouring that is upon us, as these markets are in a crossroad and have to make some very difficult decisions in the coming weeks. Take it for what it is, folks. Educate yourself. Hedge your physical holdings. You cannot avoid the paper markets. You need to participate in the paper markets the best way you can. And the best way you can to do that and hedge your holdings, protect your wealth and your family's wealth by coming over to postwavetrading.com, where I will teach you how to do that. This is the hardest thing you will ever learn how to do, but it's also the most rewarding thing that you will learn how to do. It's not for everybody. The reason why it's not for everybody is because some people are risk averse and some people are too heady to grasp and understand and overstand simple things. When it comes to trading in these financial markets, the race really is not given to the swift or the strong, but to those who endure to the end, for those who have the mental tenacity to stick with something. Leave everything you know or you think you know at the door when you enter the academy. Yes, the academy is online now. Yes, you can register to get into the academy under much prayer and consideration, because I want to help as many people as possible. This first round of the academy is not going to be tens of thousands of dollars like many other people have done when they're with their seminars and all that stuff. That's not what we're doing here. We're doing something different. I want to see if people really are strong enough to take something that's given to them and run with it. There used to be a talk on Wall Street, and I'm sure some of you have heard it, where they would call their investors and their customers Muppets. The reason why they did that, and the term Muppet is way more derogatory than sheeple. Muppet means that you're too stupid to realize and take advantage of opportunities that are presented to you. When someone takes their time and says, I want to help and show you something that's going to be valuable and worthwhile to you, and it's going to help increase your overall wealth and knowledge, that most people will not take advantage of it. There were studies that were actually done that showed that you could give someone something that was absolutely perfect and they still wouldn't take advantage of it. They would get in their own way. And unfortunately and sadly enough, there are a lot of people that claim to be awake and they claim to be truthers. But the problem is there's so many voices screaming at you at the same time that it's hard to filter through all the nonsense. So all I'm saying is I'm praying that people are more aware and alert than that, and then they will be able to realize opportunities and take advantage of them. So here's what this is. At the end of the day, instead of saying, all right, give me 1,500 to attend the seminar or the webinar or all this other stuff. Nah, that's not what we're doing. What I'm doing is, when you sign up for the weekly post wave price triggers, you will automatically be enrolled into the academy free of charge. So you will come to the academy, you will learn the things you need to learn, you will get the materials you need to get, you will get free access to the premium trading room where you'll be surrounded by other traders from all over the world, and you will get the education, knowledge, wisdom, and understanding and overstanding that you need. That's how we're going to do this. If you're serious and you want to come and see what all this is about, come on over to postwavetrading.com and get with the program. You will be very, very happy that you did. Bulls make money, bears make money, pigs get slaughtered. So remember to take what you can and give nothing back to the greedy markets. Peace. It was changed to QQQQ, or how we used to refer to it back in the day, cubes. Alright, so enough of that. What do we have here? We have a price action taking place within the center of the Kumo cloud, and we have the overall position of this market. For the most part, it's been okay. So chances are it's going to change here from this bar. So I think a continuation is in order, and we should see a break back out here as the stock market continues to ebb and flow, getting a little top heavy. All right, gold is still not ready to break out yet. Looking at the gold futures, it's getting close. Trying to make up its mind what it wants to do. 1204 is your immediate upside resistance, followed by 1247.10. That still puts you well below the Kumo cloud of death. So a lot has to go on here. So thank you for tuning in to another edition of the Volcker Report. This end of day report is being recorded for December the 5th, Monday, 2016. You're currently looking at a chart of the SQQQ, which is the inverse ETF for the NASDAQ 100. The counterpart would be the TQQQ, and the little brother would be the QQQ, which used to be at one point change from this bearish makeup back to a bullish one and break back outside of the Kumo cloud. Where do we have the evidence for this? Because the momentum is still pointing upward. All right, so you can't trust the price action inside the cloud. I know this, but because momentum is here, and because we have a situation where you opened here, you closed here and opened down here. Gap was filled on an intraday basis, but even still, all we did was retrace some of the move. It does have a couple of upside hurdles. This is a well-defined bear market at this point, but I know what you're going to say. What about the pointer back here? Well, at some point that is going to have to be dealt with. So you can make the argument, but it looks like we're looking for a bottom and basing out here. So we'll have to wait and see, and only time will tell what we do and where we go from here. Looking at the ramp, you got a ramp coming up. All right, next couple bars should